This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pachardis. Thanks for joining us at XM.com. The stimulus-fueled bear rally in global stocks seems to be running on fumes, with optimism evaporating after some distressing remarks by Amazon cast doubt on the sustainability of this heavily concentrated market, and the US-China trade war came back to haunt investors. The biggest 5 companies on the S&P 500 have gained a bigger and bigger share of the overall index in recent years, and today they account for roughly 1/5 of the entire S&P in terms of market cap. This implies that any weakness in these 5 stocks could drag the whole market down, so it was only natural for the S&P 500 to drop on Friday after Amazon warned it will post 0 profits in the second quarter, shattering the narrative that some giants can swim against the virus tide. The mood didn't get any better over the weekend. Tensions between Washington and Beijing have flared up again lately, as President Trump seems to be harnessing some anti-China sentiment ahead of the November election, which could hinge on who is blamed for the pandemic and its response. In the big picture, the V-shaped recovery that is now implied by stock valuations seems unrealistic, and investors may be underplaying the real magnitude and length of this crisis. If the initial trade war was the spark for a slowdown in globalization, then this virus and the resultant US-China blame game may be what puts globalization into reverse. In the currency market, all this translated into a classic case of risk aversion. The Japanese yen and the dollar came roaring back as investors went on the defensive again, while commodity-linked currencies such as the Aussie and Kiwi gave up some of their recent gains. The Canadian dollar was hit especially hard, even as oil prices finally stabilized somewhat. Looking ahead, if caution continues to reign, that would imply a slow grind higher for both the dollar and the yen, mainly at the expense of commodity-sensitive peers and the euro. The key risk to this scenario would be any positive headline about a virus treatment. This was today's Daily Market Comment. Thanks for joining us at XM.com.